Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show. This episode of Tech Guys Who Invest is brought to you by Dreamstone Investments. Dreamstone is a multifamily real estate operator based in Atlanta, Georgia, and Tampa, Florida. Dreamstone specializes in finding and acquiring off-market value-add deals across the southeastern part of the U.S. Dreamstone creates immense value by ensuring the tenants are treated like residents and by adding the Dreamstone touch to each of our communities. To schedule a call to find out more about their current offerings and to see how you can partner with them, please send an email to info@dreamstoneinvest.com. You can also check out their website at dreamstoneinvest.com.
Welcome, everybody, to another episode of the Tech Guys Who Invest podcast, where we teach you each week how to invest wisely and safely. And speaking of investing wisely and safely, we want to provide you with as much information as possible as to really help you understand what's happening in today's market. If you check out our last episode, tgwipodcast.com/what's-coming, we provide the facts that are affecting the entire economy right now and effects are things that are going to impact the economy moving forward. And one thing that we always try to do is keep you in the loop. And we want to keep you informed so you don't have to spend your Sunday mornings reading about moratoriums in your local area or what the CDC is doing or what Fannie Mae and Freddie Mac are doing to stop foreclosures. That's what we love to do. We love to educate you. And that's what we're going to try and do today, because when we heard this news about the CDC, Adam and I had no idea that this type of thing that they just did that impacts the entire real estate market is within their purview. We just didn't know. It didn't make any sense. So we wanted to break that down for you today. And in fact, Adam is going to introduce exactly what we're talking about.
Yeah, so in early September, the Centers for Disease Control, or the CDC, enacted a nationwide moratorium for all rental properties. And that went into effect on September 4th. So the eviction moratorium basically it prevents landlords from evicting tenants who take a few steps to say, I've been affected by COVID and I'm at risk of being homeless if I get evicted. So we're going to dig into it a little bit in more detail than that. But essentially, that's what it is. It's pretty easy for a tenant to just fill out a form and submit it, and then this goes into effect for them. They don't have to do a lot of verification or proof that their situation is what they're saying it is. And it's pretty alarming that all of a sudden the landlord or the property owner can have a stop in income coming in while they still are responsible for paying the mortgage and paying the bills on the place. So this could absolutely be detrimental.
Absolutely, 100%, as far as it being detrimental, because you're talking about people that were buying something with the intention of it cash flowing. And you couldn't have predicted that this is going to take a hold on us as it has. So you can underwrite as conservatively as you want. How do you account for something that has been as impactful as COVID? Like, you really can't, right? And what we were trying to do is to just really inform you, provide the perspective of where we're coming from and what is out there. Yes, you may be negatively impacted, but we'll kind of throughout the episode provide some different ways that you may be to alleviate the pressure from yourself. And then moving forward, you won't be able to account for the next pandemic if we ever have one in our lifetime again. But there are things that you can do to kind of help mitigate that risk as well.
So the National Apartment Association put out a statement on this, and they're making it easy for people to write their congressman, which we highly encourage you to do. If you write your representative, write your senators, and let them know how you feel about this. It could make a difference. I know I have actually done that, and I wanted to read to you the National Apartment Association's piece on this, so you can kind of get a little bit more information from uh, an industry representative. So it says, when we last wrote you, it was with the hope that negotiations in DC on a final pandemic relief package would include rental assistance. Instead, talks broke down in an unprecedented action. The administration, under the auspices of the CDC, enacted a nationwide eviction moratorium for all rental properties effective September 4th through the end of the year. So I'll stop there and say what the National Apartment Association and others were pushing for is rental assistance, like a package that would actually help renters be able to pay their bills, which they believe and I believe helps everyone. It helps the renters because, as we'll dig into here in a sec, they are no longer. It's not going to put them under a financial burden in the future, which this thing does, and it helps landlords and property owners because they're still getting payments and to help them pay their bills, right? So let me continue on. Please tell Congress that an eviction moratorium by itself will devastate the apartment industry and does nothing to protect apartment communities and the 17.5 million jobs supported by the industry. We must have a robust rental assistance program. An eviction moratorium may keep residents in their homes in the short term, but it will just put them months behind their payments that they will struggle to ever make up. And months of rental defaults will cripple our industry's ability to protect our communities, pay our employees, and meet our own financial obligations. Already, we are seeing smaller independent owners drain their reserves to keep their businesses afloat, while some residents have been unable or unwilling to pay. And then after that, it just says, please contact your members of Congress. We'll link to this in the show notes in case you'd like to do that yourself. But one thing I wanted to mention is that this plan basically says that that the tenants don't have to pay, but they still owe. So they don't have to pay while the moratorium is in effect. And then after that, all of the dues that they owed are stacked up, and then they still have to pay them. So that's just going to get ugly. It's going to cause all kinds of problems. A lot of them won't be able to pay, so it causes problems there. And then ones who actually do like to pay their debts and try, they're just going to be put years behind probably, because people who live, in places that are a little bit less expensive and are more affordable often are the same people who don't make a lot of money. So it would take them who knows how long to pay this debt off. It's just kind of a tough situation.
Very much so. And we'll link to the exact report that the CDC issued so you can read it for yourself. And it lays everything out here, but just to read the summary from this report, it says the Centers for Disease Control and Prevention, located within the Department of Health and Human Services, announces the issuance of an order under Section 361 of the Public Health Service Act to temporarily halt residential evictions to prevent the further spread of COVID-19. This order is effective September 4th, 2020 through December 31st, 2020. So it's through the end of the year. As of now is one thing that you also have to remember, that this is something that they were trying to do to help stop the spread of COVID. But who's to say what happens in 2021? What happens if it becomes even more rampant, given the flu season that's coming also, right? So those are things to consider. Maybe they extend it out. We don't have a crystal ball. We definitely couldn't tell you what's going to happen. If you have questions about the local law, because it also talks about that too in the report, that there are local laws that it doesn't, if I remember, it doesn't take precedent over it. Like it kind of is supposed to be enforcing or in conjunction with the whatever laws are there. So if there aren't any laws, I think this might take precedent.
Yep.
I'm not 100% sure. So, but my point in saying that is align yourself with the local real estate attorney who deals with evictions and and things of that nature. So a real estate attorney, not just a regular person on the billboard that says, "Hey, you've been injured, call this number." Like, they're not going to be able to help you. Call a real estate attorney that has dealt with types of evictions in the past, because they will be up to date on the local laws and how this affects you as well.
Yeah, that's right. And you're right on those points, Kevin. And listeners can go to the CDC website, which we'll put in the show notes, and see the piece Kevin just read. But also, if you scroll down to the details of the actual piece, it does explain what you said, Kevin. You're accurate on that. The Another concerning piece here is, this goes until the end of the year, so December 31st. And we know from past history, it's probably going to get extended, right? Usually, when they put these things out, it doesn't just expire when they say it does. Um, we'll see what happens here. But I wouldn't be surprised if it didn't get extended. And COVID-19 is not going away anytime soon, right?
Right.
I mean, it continues to stay around. I mean, I don't really see the number of cases dropping significantly.
Right.
Yeah, so that's just going to extend this problem further out if they continue to kind of extend the deadline on this moratorium.
Exactly. And if you are a landlord, learning who the individuals are impacted by this, again, we will link to the report so you can kind of breeze through it yourself or peruse through it yourself. But it says individuals are defined as a single individual making no more than $99,000 in annual income for 2020. Or if you're filing jointly as a married couple, it's $198,000. So that's something to consider, right? How many of your borrowers that are making under $100,000? Because they would definitely fit into that. So there's an aspect here of knowing who you're serving. People in Class A, I would assume, right? Financially speaking, wouldn't be wise if you were making that much to be paying buttloads of money to live in a Class A apartment. So looking at maybe B, C, and 99,000 is probably more than a majority of people are making in the United States. So this covers and encompasses a whole lot of other people, a lot of people in the general population. So that's another thing to consider. Another thing it says here is the individual is unable to pay full rent, and they're making their best efforts to make partial payments. So that's an interesting thing there too. It's like they're making an effort some way, shape, or form. Maybe it's through government assistance, through unemployment. They're making that effort. So it's almost like there's a human component to it, is what I'm reading into this. But like you said, Adam, it doesn't stop them from having to pay the rent. That there will be late charges that can be accrued, and that borrower, or the renter, will still be responsible for paying that. But if they're unable to pay that now, when that bill comes due, what are they supposed to do?
Right. And with some companies shutting down, and other companies still laying people off and furloughing people and shrinking, that the number of people who are unable to pay is likely to grow. Right. A recent New York Times headline said 31% can't pay the rent, and it's only going to get worse.
Right.
So, I mean, that's just in that market. But I mean, thankfully here in Florida, I know it's not that bad. I mean, it's going to depend on your local market. But the point is, who knows how long this is going to last? I mean, we don't know the deep impacts it's going to have. And this could be very problematic for a lot of people. And who knew the CDC could mandate this?
I had
It
no
just
idea.
seems weird.
Yeah, it seems like, wait, what? What are you talking about? But then if you frame it in the context of stopping the spread of the disease, COVID-19, then, oh yeah, okay, I can totally get that.
Yeah,
It just took me by surprise because I never would have thought about it in a million years.
right.
So it's really interesting.
We've already had someone file the paperwork in one of our communities.
Oh,
So,
really?
yeah, yeah. And I mean, it's concerning to us.
So
So,
let's transition here. And if you're just listening to this now, Adam, you are the multifamily investor. So from a multifamily investor's perspective, when you say somebody from your community has filed the paperwork, you're talking about somebody that lives at one of the properties that you own with your partners, they filed, hey, I've been affected by COVID. Is that right?
Correct.
So, how do you guys treat that? Like, what's the thought process operationally? How do you guys feel about that?
Yeah. So, I mean, we're working closely with our property management company to address it, and our attorneys as well, just to understand what all of our legal options are. I mean, obviously, with this being fairly new, and wanting to take into account the all of the current laws in our area, we'll be working with both our legal team and our property management team to see what our best options are. That's what we're doing there in that specific case. Um, it's a professional tenant, right? For those of you who don't know what that is, it's a person who gets by not paying rent, and that's how they live. It's a special kind of scumbag who will go manage to get into a place. They were there before we bought the property because we screen heavily to avoid low quality tenants like this type of person. And they get into a place, and then they basically stay as long as they can, and they can stay for a very long time because what they do is get to understand the laws pretty well and do just enough to keep extending how long it will take a landlord to legally get them out.
Mm,
Yeah.
okay. So for the professional tenant, that also extends to people. Not to digress too much, but there are borrowers that are like that, that milk the law and stop themselves from getting foreclosed on if they've gone into default. So it's not just renters; it does apply to homeowners too.
Interesting. Yeah.
Yeah, there are people that they know how to stall. They have the tactics. They say, "Oh yeah, I can agree to those new loan modification terms," and then turn around, default, and file bankruptcy again. Kind of start the whole process. Um, it's
Yeah.
unfortunate that happens. So from you guys, when you talk about what you can do, what's the thought process, right? The CDC mentioned, partial payments. Is that something you guys are open to? That human element, how does that apply from as a multifamily investor for you?
Dreamstone's philosophy is to really value our residents. We don't call our renters tenants. We call our renters residents. And when we buy a property, we start to weed out the high quality dreamstone type residents that we want to stay there, and we want to make the place better for them and make it a place that they want to live and can feel safe and take pride in calling home. And then the low quality ones, like the one I just mentioned, people who don't care about the place, cause trouble, tear the places up, make it undesirable for the good people to want to live there by causing problems. We work to get them out as quickly as possible. So the reason I'm giving you all of this background is because the answer is we value people, and that's part of our business model. So because we value people, we do what we can to work with them and treat them like human beings.
So
So,
how do you?
that's generally our approach.
That's a good approach. I like the terminology, the verbiage use of resident versus tenant.
Yeah.
My question was, if how do you screen heavily, right? Like, my thinking would be is maybe you need to prove that your income is X%, X times more than the rent,
Right.
so that this person doesn't make one to one living paycheck to paycheck in the regards where all their paycheck goes to rent only. How do you guys screen that?
Yes. It's super important to make sure that they make, I think it's 3 times the rent. If I'm not mistaken, yeah, I'd have to double check with our property management team to be sure that that's the current policy. But I think that was our general rule, if I'm not mistaken. And the point there is to make sure that they can sufficiently afford the place, and that by renting there, they're not going to be putting themselves in at financial risk to where if something unforeseen happens, all of a sudden they can't make rent. Also, we're looking at things like their history. Where are they coming from? How long have they lived at their last place? We will follow up on their references. You'd be surprised at the people who don't. They actually don't follow up on references, but we do, because you can get a lot of good information by that. And we'll just sort of look at how they present themselves. You can tell a lot about people by that, and even looking at their social media profiles. You can kind of tell a lot about people by doing some of that stuff. And those are some ways where you can kind of screen out the bad ones.
So if we're not dealing with the bad ones and it's somebody who's, let's say, working in the restaurant industry, that restaurant they were working at just kind of closed down, their entire source of income is kind of gone. Could you, as a landlord or as a owner of the multifamily complex, get creative with what's happening? And what I mean by that is, from a mortgage perspective, one thing that you can do is, for a non-performing note, is forgive the debt. You could say, all right, you know what? I know you can't afford this. You're behind by $20,000. We'll forgive that if you pay us, I don't know, $5,000 and $500 a month for the next 6 months. Something along those lines, where you're coming up with a win-win that works for everybody. Is that something that a multifamily investing company like Dreamstone could do, or how could that work?
You could do something like that, and companies are rethinking all kinds of tactics and techniques for dealing with this now that COVID hit. Because in the past, kind of a general practice was to say, hey, don't take partial payments because it compromises your ability to evict and things like that, just due to the way the laws worked. During good times, and you've got lots of people standing in line to try and get in a nice place, that might work. We're in different times right now where that
Great
no
point.
longer is a good strategy. And now, it is try to help them pay what they can, and, try to help them get back on their feet as well.
Yeah, you mentioned that what the law was when times were good. Again,
Right.
we can't really emphasize enough about being aligned with an attorney, local real estate attorney, especially when it comes to something like this, or a foreclosure moratorium. That's their job. It's not your job to know how to operate in that situation. Okay.
Yeah.
And so if we're looking at this now, let's say moving forward into the future, how do you see this impacting investors? How do you see this impacting people that are looking to start investing?
It will definitely harm people who bought bad deals and who are very close to just scraping by on their, in terms of their cash flow right now. But I think it's going to be a great opportunity for people who are looking for deals. I think lots of new opportunities as a result of this will be available for, people who kind of were in too thin of a deal, and this hurts them. They've got people who can't pay rent, and they're going to risk getting foreclosed on because they can't make their mortgage payments. So then savvy investors who have money ready to go can jump in there and get some opportunities. So I think there are going to be lots of good opportunities coming up soon. And for those who are prepared and ready to go, I think you can capitalize on it. Now, one thing I do recommend is consider this in your underwriting or your deal analysis, right? Like, we're doing that right now. We started doing that as soon as COVID hit. We realized this was going to be a thing. And for the properties that we have bought, because we already closed on one property during COVID, we're getting ready to close on another one. And potentially several more before this is all over with. We are now factoring it into our underwriting and greatly increasing our reserves so we can weather the storm. So that would be my advice to investors: is figure out what you need to keep in terms of reserves just for running a business responsibly, and then figure out how much additional you should keep because of this situation we're in.
Yeah, I agree with you 100% there. Knowing that something is coming, because a lot of people are emotionally driven, rightfully so. right? When you're investing, it's hard not to be emotionally driven.
Mm-hmm.
You're just human.
Yep.
So if you hear things like this, or the renters can't pay and you're not sure what to do, you may start panicking and saying, okay, crap, I need to pay for this mortgage, or I can no longer afford this because I don't have enough reserves or whatever.
Yeah.
If you're an investor, that's definitely a potential problem that you can solve. And wherever you can solve problems, you can make a profit. And you have to think sometimes outside of the box for what's out there. And the only way I think you can think out of the box is knowing how the box is built. So knowing what's possible, knowing what's impossible. And that's where I know I've said this and I sound like a broken record, but knowing the local laws through the alignment of a local real estate attorney is going to be huge for you, because you don't want to do anything to set up a bad deal and just kind of lose everything because you did it poorly or incorrectly. So that's what I'm thinking. I'm thinking, think outside the box, but know what the box is like first.
Yeah, I really like that. I like that metaphor, and know what the box is made of. As we talk about all the time, Kevin, educate yourself so you know what's going on and you understand. And then at the same time, rely on professionals who are deep experts in the area, because we're not talking about educating to the point where you have to be the expert in
Right.
the fine detailed legalese, right? Like you said, go ahead and have people on your team who are experts in the area, but you should be educated in terms of knowing what the possibilities are. So really couldn't agree with you more on that. And you always have me and Kevin as a resource, right? So if you want to reach out to us, if there's ever anything we can do for you, help you talk through some ideas, or if we can help solve some problems that you know about, we'd love to hear from you. techguyswhoinvest@gmail.com. And you can also check out our site at tgwipodcast.com.
And because there's so many resources on this episode in particular, we want to really push you to go to the show notes. So tgwipodcast.com/CDC-ban. We want you to look at the report for yourself and do more research so that you're comfortable with it and figure out how you can operate. Because again, you have to know what the box is made of to figure out how you could think outside of the box. So thanks, everybody. We hope you were now a little bit more informed than you were before the episode.
That's it for this episode of Tech Guys Who Invest. This is Adam.
This is Kevin. Thank you so much for listening to this week's episode. Be sure to subscribe to the podcast for the latest episode updates and to receive additional investor insights to help you invest wisely and safely. You can join the TGWI Insiders community at tgwipodcast.com/subscribe. Lastly, we would love to connect with you. The best way to reach us is by sending us an email at techguyswhoinvest@gmail.com. Thanks, everybody.